Let me be honest with you for a second. Most people don't avoid investing because they're lazy. They avoid it because it feels confusing, overwhelming, and honestly, a bit intimidating. There's too much noise, too many opinions, too many people telling you what to do with your money. And at some point, you just stop and do nothing. But here's the problem. Doing nothing is actually the most expensive mistake you can make. Because while you're waiting, your money is losing value. Inflation is eating it quietly, every single day. So in this video, we're going to cut through all the noise. No hype, no complicated jargon, no get-rich-quick nonsense. Just a clear, simple roadmap to help you understand how investing actually works and how to start, even if you feel completely lost right now. So here's exactly what we're going to cover today. What investing actually is, without the complicated language. What you need to fix in your finances before you even think about investing. The main types of investments, explained simply and clearly. How to build a smart, beginner-friendly portfolio. How to invest consistently without stress. And the biggest mistakes that quietly destroy people's progress. So if you've ever thought, I know I should invest, but I don't know where to start, this video is for you. Let's break it down step by step. Part 1. What investing really is. Let's start with the basics. What is investing? At its core, investing means one simple thing. Your money is working instead of you. Right now, most people earn money by exchanging time for it. You work hours, you get paid. But investing flips that model. You take money you already have, you put it into assets. And those assets generate more money over time. That could be owning part of a company, lending money and earning interest, or holding assets that grow in value. Now let's be clear, investing is not guaranteed. Prices go up, prices go down. But the goal is simple. Over time, your money grows faster than inflation and eventually starts supporting your life. Part 2. The foundation before you invest. Now here's where most people go wrong. They jump into investing. Without a foundation, no plan, no clarity, just vibes. And that leads to stress, confusion, and bad decisions. So before you invest, you need 3 things. First, clarity. You need to know how much you earn, how much you spend, what you actually have available. Without this, investing is just guessing. Second, an emergency fund. Life happens, unexpected expenses, job loss, emergencies. That's why you need at least 3 to 6 months of expenses saved. This is your safety net. Third, control over high-interest debt. If you're paying 20 to 30% interest on debt and earning 7 to 10% on investments, you're losing money, so handle expensive debt first, then invest. Part 3. The main types of investments. Now let's simplify the landscape. There are 4 main categories you need to understand. First, equities or stocks. This means owning a small piece of a company. If the company grows, you benefit. But here's the catch. Picking individual stocks is risky, especially for beginners. That's why most people should start with ETFs. An ETF is basically a basket of many companies. Instead of betting on one company, you invest in hundreds, sometimes thousands. This gives you diversification, and that reduces risk. Second, bonds. Here, you are the lender. You give money to a government or company, and they pay you interest. Bonds are more stable, but usually grow slower than stocks. Third, cash and cash-like assets, savings accounts, money market funds. Not exciting, not high growth, but important, because they give you flexibility and security. Fourth, alternatives, things like crypto, gold, or real estate funds. These can be powerful, but also risky. So they should be a small part of your portfolio, not the core. Part 4. Building a simple portfolio. Now here's the good news. You don't need something complicated. Most people do best with a simple structure. A core of ETFs for growth, some bonds for stability, some cash for flexibility, and a small portion of alternatives if you want. That's it. Your exact mix depends on your age, your income, your tolerance for risk, and your long-term goals. But simple beats complicated, almost every time. Part 5. How to actually start. Now let's make this practical. How do you begin? Step 1. Choose a platform. Look for Low fees, regulation and safety, access to the investments you want. Step 2, deposit money. Step 3, buy your first asset. That's it. It's not more complicated than making an online purchase. And if possible, use tax-efficient accounts available in your country. Part 6, the power of consistency. Here's where the magic happens. Not in one big investment, but in consistency. You invest regularly, every month, every paycheck, you automate it. And then, you wait. That's the hardest part, but also the most important, because over time your investments generate dividends, interest, and growth in value. And when you reinvest those earnings, that's when compound interest kicks in. Your money starts making money, and then that money makes even more money. Part 7, the biggest mistakes to avoid. Let's talk about what not to do. Mistake number 1, panic. Markets go down, that's normal. Selling in fear locks in losses. Mistake number 2, chasing trends. Just because everyone is talking about something doesn't mean it's a good investment. Mistake number 3, no plan. Without a strategy, you react emotionally, and emotions are expensive. Mistake number 4, putting everything in one place. Diversification protects you. Mistake number 5, confusing gambling with investing. Real investing is boring, and that's a good thing. Part 8, the long-term game. At the end of the day, investing is not about quick wins. It's about building a system where you earn, you save, you invest, and you repeat, over years, not weeks, and eventually you reach a point where your investments generate enough income to support your life. That's financial freedom. So let's recap. Investing is about making your money work for you. You need a strong financial foundation before you start. Simple portfolios outperform complicated ones. Consistency matters more than timing, and emotions are your biggest enemy. Remember, you don't need to be perfect, you just need to start. So here's your challenge. Take one step today, set up your account, research your first ETF, or simply calculate how much you can invest each month. Action creates clarity. If this video helped you, make sure to like, subscribe, and share it with someone who needs to hear this. And we'll continue building your financial future step by step in financial literacy from scratch. Until then, stay consistent, stay patient, and let your money grow. See you in the next video.